Let's get more on today's trade. Christine Ip joins us live from Bell Direct in Sydney. And Christine, so far we are in positive territory for the week, but what do you make of the ups and downs in the session today?
A bit of profit taking, I think, on the last day of this week. We're unlikely to end today in positive territory. There's not a lot of positive news to really drive the market. And really, we've been reacting to the economic data that's been pulling us in cross directions. So yesterday, Chinese manufacturing was upbeat, but only because it beat expectations. Chinese PMI actually fell to a 6.5-year low to 47.2, but it appears to have stabilised after an expected read, above an expected read of 47. So we did see that data bolster markets, but pulling us in other direction was US manufacturing. It's a third consecutive monthly fall, and it could suggest potential weakness in US manufacturing in the near term. But the US PMI read was actually above 50 and therefore still in expansion mode. And US markets reacted by ending flat in very volatile trade. We also had manufacturing data out of Europe just a day after official reports showed the region's inflation slipping below zero in September. We did see new factory orders falling as well, and an export index reading remained unchanged. Germany and France were the strongest in the region, but British factory growth appears to have run out of steam. But overall, we can still see relative strength coming from that region, in contrast to what we're seeing in China and other Asian partners. But European markets shed their early gains and closed mixed overnight. So really varied reads and reactions on those global PMI numbers, and it's seen indecisive trade on our local market today, and it's very risk off. Tonight is the big one, US non-farm payrolls and US unemployment rate for September. And it is an important release with the next federal meeting just around the corner. Expectations are for payroll gains of 200,000 and the unemployment rate to hold steady at 5.1%. But of course, any significant variation from these numbers could force the Federal Reserve's hand. But locally, we are up 0.8% for the week.
And we've had some key retail sales data also coming out this session. Any reaction on retail stocks?
It's been a little mixed there as well, but there are two stocks that we are watching. Like you mentioned, a 0.4% rise in August from the $24.3 billion in retail sales the previous month. The read was spot on to what we expected, and that comes after a shock for retail in July, where electrical and hardware goods suffered the biggest falls. So August did see food retailing as the largest contributor, but clothing, footwear and personal accessories have fallen 1.4%. Interestingly though, the strongest state was Victoria, but the ACT and Queensland registered slight falls. So with retail sales improving, consumer sentiment on the rise, we are watching retailers very closely, and we are watching Premier Investments. The share is up today, and Bell Potter has a buy rating on this stock. We recently saw very strong full year 2015 results. It has a dividend yield which is 1.5 times that of a AAA bond yield, and domestic sales have seen an improvement, and that's been a positive for the company. It's eyeing global expansions with stores opening in Wales, Scotland, Hong Kong and Malaysia just in the last 14 months. So this is great for investors looking to target growth areas in new markets. So shares are up in Premier Investments today and expect to see robust results continue for the group. Now another retailer that we're watching is Super Retail Group. That's another share that's up today. It's another retailer that's been off to a good start for the 2016 financial year. Bell Potter also has a buy rating on the stock with a price target of $11.30, and much like Premier Investments, Super Retail Group has managed to report firm sale performances from all its division. Its strongest performances are outside of Queensland, so we know that is one area that remains quite challenging for the industry as a whole, and it's forecasting strong growth to emerge in full year 2016, with earnings per shares growth expected to between about 14.5% to 16%. So its shares are up 0.9% today.
And you're also watching APA Group shares today. The ACCC raising some concerns about this Iona deal.
That's right. Shares down in APA. APA involved in a $1 billion bid for Energy Australia's Iona gas storage plant. Now, the warning comes after energy retailers expressed concerns that APA may have an unfair advantage to increase rents after the acquisition. Now, the Iona plant has contracts with AGL, Origin Energy and Red Energy. The East Coast market has projected gas demand to triple in the next 2 years thanks to the Gladstone LNG project. And the next thing consumers need is for higher rent prices to be passed on to them. Now, we've heard ACCC moving to examine transparency and barriers to competition in the gas industry. But while APA has issued a warning, and APA has issued a note saying that they're confident that they'll be able to deal with the issues raised by the ACCC, it does put their bid in serious doubt, given APA already has a dominant position in the market. The ACCC has been under pressure to look into competition concerning the market. The Queensland LNG export shipments have been ahead of schedule, so time is really running out for a review of the industry. The ACCC has also recently delayed a decision on Shell's takeover of the BG Group as well. So BG runs a $20 billion LNG plant at Gladstone, while Shell holds the gas reserves via Arrow Energy. So if APA runs into similar delays with the ACCC, we could see Energy Australia looking to another buyer. So we are closely watching this story.
All right, Christine, we'll leave it there. Thank you for your analysis today. We'll speak to you next week.
Thanks, Dan.